Hey everybody, today is January 26, 2025, and today we're going to talk about the stock market and where I see the stock market heading for the month of February. Before we begin, please read the disclaimer and you can pause this video as you read it. Okay, so where we left off last time was roughly around here. We had this big drawdown or pullback, and I basically said that I thought that the price or the stock market was going to consolidate around this level maybe for the next month before making its way up higher and pushing up higher. Now, we did recover a lot sooner than I expected, but then again, I did say that we might move sideways until we hit the inauguration, right, of Donald Trump, the 47th president, before we recover and go higher, right? And I also talked about how, it's pretty healthy to see the market come back and retest these moving averages, right? If you look at the longer term chart, and let me get a cleaner chart. We've been in a secular bull market since the financial crisis bottomed in 2009, right? You see how we've basically, now we've had like pullbacks, obviously, right? Here, we had the COVID crash here, and of course we had the correction back in 2022, right? After we had this, the stimulus boost in 2021. For now, we pretty much rocketed higher, right? So now we're still in a very strong upward trend, but it's healthy to pull back once in a while, right? And that's what I was talking about in the last video, that when we look at the daily chart, right, we do have these short-term moving averages, the 50-day moving average, 100-day, and the long-term 200-day moving average, right? And it's totally healthy to pull back once in a while because that sort of keeps the trend in check, right? Instead of it just running off and having a harder correction like we saw in 2020 in 2022, where we basically ripped off from the bottom and they made basically a V recovery and then just push up to new all-time highs. We kind of had to come back down and retest these moving averages, right? These weekly moving averages before pushing up higher. And now we're coming down a little bit more. Whenever the price goes up, the stock market goes up too high, these moving averages bands, they tend to widen, right? And what we have is a more likely chance of a mean reversion. But that's a totally healthy pullback, right? And these historically have been good at buying opportunities. So that's what I said in my last video, was that last video after we had a bit of a pullback down here, I said that we want to look at these moving averages, 50, 100, and 200-day, right? Silver, gold, and blue. And we want to see if we can hold these moving averages, because if we can hold it, it'd be a nice potential short-term bottom, and see if the market can potentially push up higher, right, and try to reclaim the previous all-time high. So that's what we did, right? We've closed our last couple sessions last week, pretty much touching new all-time highs, and just sort of off the presidential inauguration. And since it's been about a week since Trump has been officially president, the 47th president, and he's done a lot of executive orders, right? And but he still hasn't. One of the things that people worry about is the tariffs, potential tariffs that he's been talking about. So that might have an effect on the market, but he hasn't talked about that yet. He's still, it's his first week in, and he's still adjusting to becoming the president yet, right? So let's talk about inflation. Inflation went up a lot higher than expected, right? In fact, we've been on an uptrend since September for 1, 2, 3 months in a row, right? So this is a little concerning, but it does seem like the dollar, at the same time, the dollar seems to have been peaked, at least in the short term, right? So if you look at the dollar generally moves inversely to the stock market, right? So we've had like 6 weeks up, and now we're falling down a little bit, right? You see the RSI is a bit overbought, so we're seeing a technical correction in dollar, which is also putting less downward pressure and more pressure on the stock market, right? You can see how we had a reversal on January 13th, right? You look at the stock market, bottomed in January 13th, right? So as the dollar went down, the stock market went up, right? And a perfect bounce off the 200-day, which is our intermediate moving average, right? So everything looks pretty good. You can see that it's not out of the ordinary for the market to pull back once in a while, even to these intermediate moving averages, right? This is going back to earlier of last year, right? Spring of last year, we touched here 2, 3, and now 4 times, right? We tend to hit the 50-day a lot more often, but like I said earlier, it's generally a good idea to touch these moving averages once in a while and have a bit of a pullback, because that keeps the uptrend in a more healthy, instead of going parabolic, in which we'll have a much more severe drawdown usually, right, as it mean reverts. So as far as I'm concerned, this pullback is quite healthy, right? and everything's looking good, right? We're not overbought or anything in the weekly. The trend still looks very good. The monthly is in the overbought territory, but we've been overbought for a while now, and it continues to. In the past, we've been overbought in the monthly, and it still could continue to go up higher, right? Before leveling off to put potential pullback. So we covered inflation, and the next CPI report is going to be February 12, right? Which of course is next month. So some potential headwinds, right? I've been talking about this for the last couple of videos. Is the yield curve inversion, right? We've been inverted for a while now, since 2022, and we've uninverted in 2024. And usually when we uninvert, it's followed by a recessionary period, right? You can look back until the 1980s, right? Whenever the yield curve uninverts, we tend to have a recession. Now that doesn't necessarily guarantee we're going to have a recession anytime soon, but generally speaking, this is the trend. So this is a potential headwind we want to look out for, right? Again, not saying it's going to happen this year, but it could happen within the next 12-24 months, right? Again, when the Fed starts cutting rates, which they're doing now, although the Fed did say that they're expecting to not cut as much in 2025 as they did in 2024. So that's also another reason why the market did pull back a little bit, right? And this usually, when the Fed cuts, it's followed by a recession as well, right? You can look all the way back to the 1950s. Again, doesn't mean it's going to happen anytime soon this year. Could happen within the next 12-24 months, but it's just another headwind to look out for. Ultimately, I am optimistic about 2025 because, again, we have Trump as president. In 2017, his first year in office, we had record low volatility. Right? Let me get a cleaner chart for you. You can see the VIX index, President Trump's first year in 2017, we had record low volatility, and we're starting to see a trend down, right? So if we do go down to closer to 10 vol VIX, that could mean the stock market might have a nice year this year, right? 2025. Again, 2017 we had one of the smoothest, lowest volatility, smoothest market uptrends in the history of the stock market, and so it's possible we might repeat that this year if the volatility does come down, right? As Trump's first year in president. But again, we want to look for what he says about the tariffs, and that might affect it, right? So looks like we covered everything so far. So just to summarize, I do think that as the market starts to adjust to Trump's first year as president, we definitely want to look out for what he says when it comes to like tariffs. And but for now, I'm pretty optimistic, and I think we'll continue to try to chop around sideways, build support around this new all-time high area before pushing up higher, right? So maybe something like this. Something like that, right? So I think February is going to be probably a sideways month, unless we get like really great inflation data. Maybe inflation goes down, and maybe the Fed will cut more, right? But again, the Fed's going to have their next meeting, and we're going to have to see if they want to cut more. If they don't cut as much, we might see a pullback down to the 50-day again. But I do think that with this really great recovery, it does seem more like we're going to go. Feels more optimistic, like we're going to go a lot higher, right? But for the month of February, either I think we're going to go sideways, build support, and push up higher, or we're just going to rip up higher. Maybe come down, retest support, push. But overall, with Trump in president, he's very pro-business. I am optimistic, but just heads up for everything that I said, right? Yield curve, Fed cutting rates, potential headwinds, but also the tariff, right? We still have to see what Trump says about that. But overall, optimistic about the future of the stock market for the rest of the year, and of course for February. If you found this video helpful and useful, informative, please like this video, leave a comment below, and subscribe for updates. Appreciate all your support, and thank you again, and have a great day.